But let's talk about the dairy space. Dodla Dairy is the next management on the show. The company aims a higher capacity of milk procurement per day, 20 lakh litres. Animal feed business as well could be one of the big triggers for them. And also, the milk procurement prices have stayed stable. Typically, when that happens, ahead of the festive season, we see increased sales for value-added products and gross margin expansion for the dairy industry as well. As we've seen in the first quarter, the question is whether that sustains or not. Sunil Reddy Dodla, who's the MD of Dodla Dairy, joins in. Thanks a lot, Mr. Dodla, for joining in. That's really the first question. First quarter, we did see a decline in milk procurement prices. Where do they stand at the end of the second quarter? We're looking at a flush season now as well. What's your prognosis for this entire year?
Thank you very much for having me on the show, and good morning to you. I think this year will be a good year. Milk procurement prices have remained stable, and quantity of milk, although the flush season is just coming in, has remained pretty stable. It's not shot up nor has it declined, and it's been maintaining a stable trend. So I think stability is the key here. This year has been a good year, and stability has been good, and that is going to be helping a lot in terms of our bottom lines.
Absolute price right now of milk procurement?
No hikes in price, only marginal corrections. Either certain states it's been a little bit on the lower side, certain states it's been on the higher side, but very marginal differentials that have been happening and nothing major. So I think it is going to be a steady state of pricing that will be maintained for the current year.
All right. And what about your current procurement capacity? Earlier, when we spoke, it was closer to 18 lakh litres per day. You were looking to ramp it up to 20 lakh litres. Where does that number stand right now?
Right now, we would be at an overall consolidated basis around 16.5 lakh litres of milk. The 20 lakh litres that we are looking at is taking into consideration another year or year and a half that we have to do, for which we also have to build additional capacities in terms of ghee and powder making, which is the reason why we'll keep balancing it. But we will be able to achieve that within a year or two.
What about value-added products? Because yesterday we spoke with the management of Heritage. They said that their value-added business is growing upwards of 20%. Their fats business is also growing. In the dairy industry itself, they showed the highest amount of gross margin expansion this time during the quarter as well. With stable milk procurement prices, what is your target growth in value-added products this year? Contribution from that as a proportion of sales, and as a result of which, margins for this year?
So basically, value-added products for us will also increase. It's also been driven by increase in all ends of the value-added products, be it ice cream or ghee or other products that have come in. So this year, we will also see a substantial increase in value addition compared to last year. I think at least by 5-7%, we will see an increase in the value-added product, increase in the overall revenue that we are operating on. And also, if you look at profitability, because of stable prices, value-added increase, and the growth that we have seen, we are looking at maintaining, compared to last year margins, current year margins would increase at least in their high teens.
Okay, high teens is what you're expecting. You've also, looked at scaling up your animal feed business. As a proportion of your revenue, where can that number be? Because, I'm looking at the first quarter numbers itself. It's a 10% margin business. You did about 32 crores of revenue. How much can the revenue scale by, and how much can the margin scale by once you get operating leverage here?
So our revenue will almost double from last year to where we are in the current year in terms of revenue. Margin will maintain at 10%. But as a part of our overall share in terms of our revenue, it's still very small. It may be less than 5%. It will be around 4%.
All right. Just a final question before we let you go. On the industry on the whole, on the one hand, you have Amul, which is extremely competitive, doesn't want to cede market share to anyone. At the same time, doesn't have the pressures of profitability or listing as well. So, how do you deal with that big competitor? And then you have the other private players as well, vying for the same theme that everyone else is looking at: higher value-added products, increased procurement, increased distribution, and looking at alternate sources of revenue. So, what's the competitive situation like right now, and your market share aspirations from here?
Basically, I think as we are going forward, we are seeing a lot of consolidation happening in the markets. If you look at it as Amul, yes, is an aggressive player. He has been coming into our markets. He has also come into areas of Hyderabad. They've been here for 4 or 5 years. It's not something new that they've come in. They're doing their bit. We are doing our bit like any other business. All of us are continuing to grow and gain market share. It's becoming a larger game now. So I think in the years forward, we will see a lot more consolidation happening, and a fewer companies emerging, and they'll be the ones that will continue to go forward.
All right. Thank you so much for joining in. You seem to have brought good luck, not just for the dairy industry, but for the markets as well. The Nifty